Welcome back to the Armchair Trader podcast. And on the podcast this week, we're talking about the healthcare sector, which is very big and something that in my conversations with investors, I find has been one of the areas they've really been focused on in the last 12 months. And on the podcast today, we actually have Paul Major, who's the portfolio manager at the Bellevue Healthcare Investment Trust, who's joining us to talk a little bit more about this sector. It's not something that a lot of people will know about, but certainly from my experience, it's been something that's yielded a lot of very interesting investment opportunities over the course of 2023. And I know it's something a lot of investors are still quite focused on. So thank you very much indeed for joining us on the podcast, Paul.
It's an honour to be here. Thank you for having me.
So I thought we'd start off with the actual healthcare trust itself, which you're responsible for managing. Can you give us a quick rundown on its investment objectives and where it invests?
Sure. So our healthcare fund, for want of a better word, is a little bit different to many of the peers in that it combines a bottom-up stock picking approach with a very concentrated portfolio. So we can only have a maximum of 35 companies with a top-down thematic overlay. And that top-down thematic overlay can be simply summarized as: we think the healthcare systems of the developed world are fundamentally broken. They need to be reimagined to be made fit for purpose for the challenges of the 21st century. And so we see a significant revolution in the kind of healthcare delivery paradigm as being necessary for that to happen. And just to summarize that, why we think that's the case, if you look at the history of healthcare in the developed world, it's really stems from a post-war settlement, and the systems that were set up haven't evolved that much over the sort of 60 or 70 years since. And they were initially set up to deal with basically reacting to demand with people suffering from acute episodes of either generally cardiovascular disease or infectious disease. You roll forward to today, we have an aging population burdened with chronic medical conditions. Most of the things that render people in hospital aren't going to kill them anymore. Thankfully, heart attacks and strokes and things are often manageable conditions now. But what this means is people live to a much greater age, but they run the challenge of their body inevitably wearing out over time. So we have to manage a burden of chronic disease. So things we can't cure, we can't fix. We just have to ameliorate as best as possible. And the vast majority of healthcare expenditure is happening in those post-retirement years of life. And that's putting significant challenges on the system as it scales to deal with an aging population. But also we need to think more fundamentally about where the healthcare dollar goes to try and focus more on a kind of preventative model to identify people before things become serious and help them to manage those better. And the trust was launched in 2016 because at Bellevue, our view was that the agents of this change were available and investable through the public realm. And we thought it was, on a multi-year view, a very compelling opportunity to offer investors an opportunity to kind of participate in that. So we are very much away from the traditional healthcare areas. If you look at historical success in healthcare, it's very much drugs and medical devices. We have a much broader, unconstrained mandate that allows us to go into all kinds of technology and consumer areas if we think they're appropriate.
And we've been talking a lot about investment trusts over the last few weeks with our readership. Could you just quickly give us some background on the trust's approach to share buybacks and gearing on the trust, and what is the current policy you have on that?
Sure. So with regard to gearing, our aim is to run a mid-single digit level of gearing over the lifetime of the trust. We did run in the latter phase of the pandemic. You might remember when the vaccines first came out, everybody said this is all going to be over very quickly. We found that extremely unnerving. So we ran a significant cash balance for about 6 months during that period of the pandemic. But if we X that period out, we've broadly stuck with that kind of mid-single digit geared objective. We think about gearing as a way to augment returns based on confidence in the broader market. So currently we're not very geared because we see the geopolitical and macroeconomic situation as somewhat challenged, and therefore our appetite for gearing is a little bit lower. With regard to share buybacks, discount control, and all those sorts of things, I mean, obviously these are things controlled by the board of the trust. We have an annual redemption option as our primary discount management tool, and it's an ungated redemption option that takes place in November every year. The extent to which you think redemption options are a successful discount management policy is clearly one to be debated. In the current environment, discounts seem to be persistent across the trust space, regardless of performance, regardless of underlying asset type. And my personal view is that reflects all sorts of challenges around transparency on fees and governance for the sector and liquidity for many trusts, rather than anything necessarily inherently related to the individual investment strategies. We do have a share buyback program. We haven't outlined in detail what the criteria are to trigger that buyback, but it's obviously related to the discount to NAV and various other factors around where the shares are trading. And it's been active during 2024, but not very active.
Gotcha. And then going back to the sector, my own observation has been that some of the real sort of upside in this sector has been from healthcare technology stocks. Certainly, that's what I found with a couple that we invested in last year. In fact, one was actually bought out. Is that something you would agree with in terms of the actual tech side of the space?
I think technology is very interesting. We've had some very successful healthcare technology investments, and we've had some very unsuccessful healthcare technology investments. I mean, as soon as you venture into healthcare technology, you are by definition venturing into a very fast-moving world where obsolescence happens very quickly. And if we'd have been having this conversation 4 years ago, I would have been expounding the virtues of telemedicine and how telemedicine was one of the most obvious levers that could be pulled in order to change the healthcare delivery paradigm, make it more efficient. And of course, here we are in a post-pandemic world where these days a virtual appointment with a GP as a first touch point is universal. As a consequence of that, the provision of that technology is completely commoditized. So we made money in that space much quicker than we expected, but we saw the end of the opportunity come dramatically quicker than we expect as well. So I think you have to be prepared to dance and accept the reality of the environment. But what I would say is that broadly across healthcare, the majority of the things that interest us have a significant technological component driving them. And if you think about healthcare just from a 30,000 foot view for a second, we're always asking these interesting questions. What's the best way to do X? What's the best way to rehabilitate someone after a hip replacement? Or, what's the best way to stent somebody or whatever it might be? As soon as you start asking these questions, you have very, very challenging data sets because there are so many variables, age, gender, ethnicity, the smoking status, socioeconomic status, previous medical history, family history, etc., etc., etc. So when you get so many variables come together so quickly, first, what it does is it means that in order to dial the noise down, you need enormous data sets, tens to hundreds of thousands of people. And then secondly, you need some very advanced computing power to be able to deal with that level of complexity and size. And it's only really in the last 5 or 10 years that we've got to the point where we have electronic medical records that we can analyze and prosecute, and we have all this data, and we're beginning to tease it apart. And it's ushering in revolutions in a huge number of areas of medicine. Most importantly, I think around a lot of treatment algorithms, in the sense of a patient presents with certain characteristics, what's the best, most cost-effective, quickest way to deal with something, firstly. And then secondly, around prioritizing your kind of healthcare dollar. So again, if you think about a GP surgery, they might have 5,000 people on their books, let's say. That's going to span a huge range of age and medical history. And thousands of those people require no medical intervention. A young, healthy person in their 20s is very unlikely to have any medical problems. So you don't need to pull them in for routine appointments. You don't need to do things. if you've got somebody in their 40 or 50 years old, overweight, the risk around things like type 2 diabetes is very high. So arguably you should be pulling that person in more regularly, talking to them about lifestyle factors, analysing their blood sugar and various other parameters, and trying to stop them tipping over the edge from being pre-diabetic to having something like overt type 2 diabetes, which is debilitating for them and very costly for society. So algorithms and data analysis are absolutely at the heart of everything positive that's happening in healthcare. The challenge, I think, directly from investing in a healthcare IT company, for want of a better word, is monetization, because as I say, so much of this depends on data verticals, and they generally belong to either government organizations or very large healthcare conglomerates, and so much of this commoditizes incredibly quickly because the actual IT isn't that complicated now with the systems we have available today. So there's no barriers to entry, I would say, other than getting access to the data sets themselves.
And another big trend in the healthcare sector is the expansion of private healthcare. I mean, we're seeing it here in the UK. It's obviously already massive in the US. Is that something you're able to tap into as an investor as well?
It's that's a very it's a correct observation. It's a very UK centric way of looking at healthcare, I guess. So it's worth bearing in mind. This is a $10 trillion global industry. There are nearly 8 billion people in the world. Everybody's going to get sick. We're all in this to varying degrees, and where you live, what country you live in, is obviously going to dictate the quality of services that are available to you. The UK represents about 2% of the global healthcare expenditure. So it is a tiny, tiny little market. It is also an incredibly strange market. It is the only primarily government funded, monolithic, universal healthcare system in the world. And, everybody wants to eulogize the NHS and say how brilliant it is. Unfortunately, we all know it's not brilliant. The service it provides is not very good, and none of us are particularly happy with it. I think satisfaction levels with the NHS are at all-time lows, as I recall from the last survey I saw. Let's also remember this monolithic system is unique in the world. It's existed for 70 years. And the interesting question is, if it's such a fantastic and wonderful idea, why has no other country ever copied our healthcare approach? So let's come back to the private partnership thing. So again, the perception is the US is this, totally driven by private medical insurance marketplace. That's actually not entirely true. So is very slightly the largest purchaser of healthcare services in the US, because everybody over 65 gets Medicare, which is a government funded benefit, and then you have Medicaid, which is a social welfare program, and then you have veterans who get healthcare services as well through a program called TRICARE. So the government pays for an awful lot in the US. Most countries in the OECD, it's probably about a 70-30 split between kind of government and private, in favour of government, and that can be local or countrywide in terms of who the government is. What's interesting about most of these systems that's different to ours is there is a greater element of choice. So I think most people don't realise in the UK you do have a much greater say than your GP will tend to suggest to you as regards which consultants you get referred to for an operation. And there are also databases of their statistics. So there is no reason why anyone should get referred to a bad surgeon, for want of a better word, in the UK. It's just knowing that information is there and knowing how to access it. And they don't make that easy for you. But in other countries, choice is much simpler. And I think in the end, that probably creates a better system, because clearly, if you have choice and you have a provider who provides a substandard service, then you don't go there, and that provider either has to up their game or get out the game. And I think that lack of competition is the biggest challenge that we face in our services. Where I live, in the town I live in the UK, my local GP surgery is rubbish. There are other people who live in the same town. They happen to go to a different GP because of their postcode. Their GP is better than mine. There's nothing I can do about that. And that is where the problems kind of begin. So does private healthcare have a much greater role to play in the UK? I think in the fullness of time, it's inevitable that it will. And I don't think anyone should be scared about that, because you have to objectively start with the question of, what do we have today? Well, the answer is we have a really bad system that's very expensive and doesn't work for any of us. And the only way is up from there, in my opinion. If we look at other countries, particularly countries like Australia, for example, where you have national healthcare provision, but private healthcare providers, and you have that choice, you end up with a very competitive market where service levels are extremely high, because people know that the healthcare equivalent of TripAdvisor, they're going to get a bad rating if they don't look after you, and that leads to much higher service levels. So I think the concept of healthcare being available to everyone is a very noble pursuit and worth hanging on to. But I think the monolithic approach we have in the UK clearly doesn't work, and we should actively explore alternatives. That's my personal view, um, and I can't see that that's not going to happen in the fullness of time.
What is it about healthcare companies, from your opinion, that has made them do so well? They certainly seem to, the sector seems to be doing very well, and certainly the investor data seems to point to the fact that investors like the sector. I mean, it was rated as, along with the tech sector, as one of the top two that institutional investors favored going into 2024.
Mm-hmm.
What are the characteristics of it that investors seem to like?
Sure. Well, it's a classic defensive growth sector. So, of all the people that you've had on your podcast over the years, I mean, there's probably, other than somebody who's involved in a fund that invests in the supply of electricity, I can't think of anybody who could come on and state with such confidence that the market that the companies they invest in serves will be materially bigger 20 years from now, with absolute certainty. Because as long as there are people, there will be illness. And if there are ever more people, there will be ever more illness. And the longer people live, the more inevitable illness becomes. So as we, in the whack-a-mole game of extending human lifespan, the only winner is the healthcare system, because if you don't die of something, it opens up the opportunity for you to die of something else later on. So we always win is the crude but simple answer to all of this. So this is, as I say, it's a $10 trillion global market. It grows at 5% a year in kind of dollar terms broadly globally. If you look at the relationship of healthcare to GDP and economic development, again, being very simple and crude, if you look at the development of countries from very poor to advanced economy, once you have a roof over your head and food in your belly, you have the opportunity to start worrying about being well. So what you see is, as countries reach a certain level of economic advancement, you see a hockey stick increase in healthcare expenditure as a percentage of GDP. Firstly, driven by opportunity, because people have the chance to think about staying well. And then secondly, as a consequence of that, they live longer, which means they inevitably get ill, which means they spend more on healthcare. So we have all of these factors that will drive growth and force multiply that growth relative to overall kind of GDP. If there is a recession or a pandemic or any kind of negative event for the broader global economy, it doesn't impact healthcare. Clearly, if it's a pandemic, it's a healthcare related thing in the first place. That creates new but different opportunities. But people get sick if there's a recession or a boom. So we are classic defensive growth. And then the final thing to layer onto all of this is that if you think about any disease process in a living organism, this doesn't just apply to human beings, but that's the focus of what we're looking at. There is a molecular process underlying that. So every disease is an imbalance in various molecular pathways, and we are still in the very earliest innings of underpinning the biology of most diseases. So there are these things called ICD codes that basically insurance companies use to code you for what diagnosis you've received. And there's different versions of them, but depending which version you use, 9 or 10, there are between 10 and 14,000 recognized human conditions that you can suffer from. Now, if we actually look at those and say, how many of those are treatable conditions that we can just give you something and then you'll get better, it's in the hundreds. So you think about the white space of opportunity to, use technology to improve disease outcomes, then again you see this just enormous opportunity ahead of us, where in the future we will be able to treat vastly more things, and again hopefully expand not just human lifespan but human health span, because the challenge we have at the moment now is lifespan has advanced and health span is not advancing at the same rate. So we're spending our final years in very expensive and unsatisfying decrepitude with things like dementia and stuff. So that's the next key element of this to unpick. But it does create this huge potential longer term opportunity. So they're all the reasons why I think you can be very, very certain about the outlook for healthcare broadly. Where I think this gets more challenging is you also need to recognize this industry, particularly with regards to novel drugs and to a lesser extent medical devices. The development of new products is firstly incredibly expensive. It's secondly very time consuming. And thirdly, we are broadly speaking absolutely terrible at it. So if you look at the statistical data, you've got sort of 4 or 5% positive financial return probabilities from projects started in the kind of pharma biotech sphere. So, investing carefully and using portfolios is absolutely essential in this. I think, if you've seen one biotech company, you've seen one biotech company. None of them are the same. They all have different risks and different exposures. And the idea, to us, it's actually quite interesting, even that people think about biotechnology as a sector. We see it as a collection of unique individual companies, and just because something happens with one of them, it tells you nothing about whether or not something's going to happen to another one, if you see what I mean. So I think incredibly exciting in the long term, unquestionably, but there are challenges. The first is around that risk reward side. The second thing is, and we have to live in the real world. All of this growth that I'm talking about, someone ultimately has to pay for it, and that somebody is us. And funding all of these things is going to be challenging. So there is a very strong argument at the same time that we need to invest hugely into productivity enhancement in healthcare. And as much as everything I've just said is really positive, if I then turn around to you and said, this $10 trillion industry you should invest in, $1 in four spent within it is completely wasted to no medical benefit whatsoever. The people who spent 3 years learning to be a nurse or 7 years learning to be a doctor spend a third of their life doing paperwork. They don't tell that to you when you apply to medical school. And 25% of all interactions between a patient and a caregiver, so a doctor or a nurse, are deemed not medically necessary after they've taken place. The investment case for healthcare as an industry suddenly looks slightly less compelling. But the reciprocal of that is that clearly changing those statistics is an enormous opportunity. If we could stop wasting $2.5 trillion a year and we could reinvest that into care, what an amazing healthcare system we'd have in every country.
Talking about profitability, obviously government plays a big role in this space. How important is the presence of government funding in the healthcare sector in terms of contributing to the overall profitability? Because it obviously plays a big role, probably a bigger role in this sector than many other sectors when you look at it.
Yeah, I think that's a very fair point, and certainly most of the innovative ideas come out of academia, and most of the academic funding comes out of grants provided by governments. The National Institutes of Health in the US is the largest funder of healthcare research in the world, and one of the challenges the sector is facing at the moment is that the political gridlock in Washington means that they haven't actually signed a budget bill. And because they haven't signed a budget bill, regardless of whatever has been appropriated to the NIH, they can't pay out the full amount until the budget is actually signed. So there are lots and lots of projects that are having to operate on a budget that's about 10% lower than it should be. And as a consequence of that, people are deferring purchases of bits of lab equipment. So, you obviously you want to run your experiments. You're looking, where can I save money? So you think about the CapEx side. So if you look at companies operating in the tools and services sector in healthcare, you'll see that valuations have been pressured over the last 6 months, and it's directly related to that point about availability of government funding. Similarly, we're seeing some challenges in China around that as well, where it looks like, for reasons that nobody understands, government funding seems to have been curtailed in some areas, and that's had a similar chilling effect on companies selling those products and services into that marketplace. So government funding is absolutely, for science, is absolutely essential. I think if we're talking more in a UK context, I think the more interesting question to my mind is to ask why UK PLC, UK investors, are less willing than their American counterparts to fund these early stage companies. So something like 80% of all the healthcare venture capital dollars that are available come from the United States. And there's a long and storied history of companies being started here and then ended up being listed on NASDAQ because they couldn't get the backing of investors, or they couldn't get access to early stage venture capital money here in the UK. And I think as a country, given our leading global role in healthcare startups, if you look at Oxford and Cambridge University, Edinburgh, Imperial, they're right in the top of the leagues globally. But every time you hear about some innovative healthcare company, it's American. That needs to change. And the government has a critical role to play in that. And related to that clearly is making the UK stock market attractive in the first place.
Yeah, no, that's an entirely different can of worms. I won't open now, but um, you mentioned China just now. I mean, the Asia healthcare. Even as we sit here at the Armchair Trader, we don't really hear a lot about the healthcare sector in Asia. I mean, what does that look like, and are you bullish about that?
China's been very, very challenging. China's been challenging for several reasons. Firstly, the pandemic was, the ferocity of the lockdowns in some of the cities there, and the consequences that have been significant. And then secondly, healthcare has been directly targeted in one of President Xi's anti-graft campaigns, to the extent that I think doctors are worried about how they go about choosing which provider to use for a particular product. Let's say a hip or knee replacement. Why am I buying from company X instead of company Y? So that has definitely slowed the development of the market. I think broadly China long term, the pattern that you've seen in the drug sector over time is they're very keen to have the latest technologies available in the market, but then in the longer term they tend to support with their tenders and things like that local players over kind of international ones. The healthcare system itself is still in a very early stage of development, so they have some world-class hospitals in tier one cities. So you go Beijing and Shanghai and things. You get out in the provinces, not so much. And it's interesting, one of the first telemedicine companies in China was started by the insurer Ping An, and the company was called Ping An Good Doctor. And it's a very unusual name for a company, until you find out that what they were trying to convey to the Chinese population with this branding was that all the people who were claiming to be doctors working at the company actually had a medical background, actually had a medical degree, and were real doctors. So that sort of attests to some of the challenges that the country faces. But they have a very rapidly aging population, so they are going to have to get on top of this, I think, very quickly in the coming years. So just with regards to market opportunities, what we've tried to look at in China are obvious and unavoidable diseases of an aging population. So we like what we call interventional cardiology, which is dealing with all those, atrial fibrillation, further arteries, all those inevitable things that are just going to happen to your cardiovascular system over the passage of time. And then on the pharmaceutical side, it's quite interesting. There are always genetic factors that go into susceptibility and presentation of certain diseases. So what you'll find is, if you look at cancers, again at a kind of molecular signal level, the types of cancers that you see prevalent in China are different to what you'd see in the United States, because of the ethnic heritage of the population being different. So there is an opportunity to take kind of Western approaches and finesse and target them slightly differently to optimize them for the Chinese population. That's something that we think is a very interesting long-term opportunity as well.
And speaking of long-term opportunities, I mean, you have touched on AI already. I personally think AI could have a massive impact on the healthcare sector. Are you taking advantage of that trend as well?
I think we've the recent excitement for all things AI. I think for healthcare investors has been moderately amusing. So if you kind of scan Google Scholar and you use the old-fashioned term machine learning, which is what they called it before it was trendy, you'll find academic papers talking about the application of machine learning in healthcare, going back to the early 2000s. The drug industry was one of the first proponents of this sort of thing around candidate selection and target optimization, because in the late 80s, early 90s, there was this, right, we can create millions and millions of molecules. What do we then do with them? How do we decide which ones to select and take forward, and what do we take them forward for? And that was a problem that was quite amenable to these kind of AI approaches. So the the use of AI in healthcare is long-standing, and I think it's interesting that people are talking about it quite a lot in the drug development world. There are a number of companies you can invest in. There have been some here in the UK. Benevolent AI would be an example, and there's the one that spun out of Oxford, Paul Drayson's company, that I can't remember the name of off the top of my head. But if you look at those, they've all been disastrous investments. And the reason they've been disastrous investments come back to something I said earlier. So if you're trying to develop new drugs, it takes a long time and it's very expensive. And so to prove that you've got a statistical advantage versus traditional methods is going to take decades, because you need to build up enough data to have an analyzable data set. Also, bear in mind, if the statistical probability of a positive financial outcome is only about 4%, if you're twice as good, then that's 8%. You're still going to fail 90% of the time. So these are very, very, very risky investments, and something that people should kind of bear in mind. Now, when we look at AI deployed in a more practical sense, where it's already having a huge benefit to healthcare and has been for many years, I can think of two or three areas. So the first is in genetic analysis, gene sequencing. So we've had a revolution in the cost and power of genetic analysis, primarily driven by Illumina, which, by the way, its technology was acquired from a British company that unfortunately investors wouldn't support to the appropriate degree. So Illumina acquired it, and the rest is history. Much of what has happened there is driven on the computational side. So it's actually the way the Illumina machines work is they take your DNA, they smash it up into a zillion pieces, and those pieces kind of overlap, and it uses very powerful multiplexing to read them in parallel, and then it uses AI to reassemble the bits into coherent sequence. So that's how they've driven down the cost of sequencing and improved the speed of it. So that's been at the forefront of a lot of diagnostic revolutions for a long time. And when we look at cancer screening tests, the way that most of these are developed now is you basically take samples from patients, you follow them for a long period of time, and then you look at what we call epigenetic markers, and then you go back and you use an AI to tell you what markers would predict disease. So you're back solving using kind of AI. So a lot of novel diagnostics have been developed by AI approaches and continue to do so. And then in imaging, if you go to Siemens or GE and you buy yourself a new CT scanner or MRI scanner for several $1 million, it will come with lots of funky AI in it that basically, when the radiographer looks at the scan, it will highlight areas that don't look right. So it saves a huge amount of time for the radiographer by saving them looking at the rest of it where it's all as one would expect. I think if you look at the sensors that we use to measure blood glucose for diabetic patients, or the pumps, what we call automated insulin delivery, that's all AI. Now, what's interesting with all of those ones that I've just talked about, in each case, by and large, the companies that sell these products, they haven't charged anything extra for the AI. So what it's been is an incentive for you to upgrade to the next device when whatever device you have comes to the end of its life. And that's one of the things I think is interesting about this as well. From a monetization point of view, I'm not sure that the profits necessarily accrue to the companies providing the AI enhanced services. I think they accrue in terms of incremental profitability or productivity to the end user. And that will be very hard to measure at a societal level, particularly in something like healthcare, where you have inbuilt cost inflation anyway. Or what you'll probably see is slightly lower than expected cost inflation over time, because people are investing AI into these things. And I think another area where it's going to have huge benefits, and this is not to be downplayed at all, is improving quality of life for physicians. So again, coming back to a point I made earlier, none of these people signed up to spend a third of their life doing paperwork. And if you can automate that paperwork, you can improve quality of life. Most doctors that are doing surgery, they're probably seeing 8 or 9 patients in a day. If you can improve time by 15 or 20%, there's possibly room to see another patient. That's a huge productivity benefit. But even with regards to simple things, you see a patient, you then have to, you take notes, you then give those notes to a medical secretary. He or she will transcribe them, give them back to you, you will edit them, and then eventually you'll end up with a set of coherent notes that you send to the patient and goes into the computer and what have you. We have software now, so there are options. They're being evaluated in the NHS as well as all sorts of other places, but there are software packages where it records the session between the doctor and the patient. It creates the notes automatically, and it bypasses the medical secretary bit. So the notes that come out of those processes are now comparable to notes written by a doctor and transcribed by a medical secretary. What that means is the medical secretary can then spend his or her time doing more useful things like chasing up patients who haven't gone to appointments, making sure follow-up appointments get booked, making sure their prescriptions get filled, and all these sorts of things. And the doctor is obviously not having to do as much work, which means they can go home earlier or they can see more patients, either of which is obviously positive from a quality of life and productivity point of view. So it is going to have an impact, but I do hesitate to predict how you're going to see it monetized, other than obviously the chips themselves.
I wanted to ask you about this sort of what I would call the obesity epidemic. I mean, you've referred to it already in passing with the increased chance of diabetes in developed world populations. It doesn't seem to be getting any better. Is this going to affect the healthcare sector, and how do you see that playing out? And as a kind of correlated question to that, I also wanted to ask you whether preventive medicine is something you look at and the benefits that can bring.
Yeah, so there's a couple of questions. Let's talk about obesity first. So obesity is a burgeoning epidemic. You can cut numbers all sorts of different ways, and it's difficult because people tend to use BMI, and BMI is a very imprecise measure. If you're muscly, you weigh more, so BMI can identify you as being overweight or obese when you're actually like a stacked rugby player or something like that. But if we look at the data, what we can see is a significant portion of adults and a worryingly significant portion of children in developed countries, including this one in 4 children aged 12, I think, are deemed obese in this country, which is terrifying. And obesity conveys all sorts of increased risk with regard to certain diseases. Now, you have to be careful with this because obesity does undoubtedly cause certain diseases. It's definitely linked to macro cardiovascular disease because your heart has to push blood around all of your body. If your body's bigger, it has to work harder. That's not good. And it is linked to increased risk of cancer through a very complicated interplay. It's also linked to risk of liver disease and to a lesser extent kidney disease. But there are something like 200 diseases that are linked to obesity, in the sense that if you're obese, you are more likely to suffer over symptomatology if you get those diseases. So rheumatoid arthritis is a great example. Being fat doesn't cause rheumatoid arthritis, but broadly speaking, every kilo of extra weight you have carrying on you when you walk increases the force on your kneecap by about 2.5 kilos. So if you're overweight and you have got arthritis, your joints are going to wear out way quicker if you're very fat, for example. So obesity is a big problem. Just to put it in context, you mentioned diabetes earlier. So according to the US government, 38% of adults in America have pre-diabetes. We need to do something about that because the cost implications of this reaching its currently inevitable conclusion is just mind-boggling. And we're living in a world where we do have, for the first time ever really, some obesity drugs that are, for a significant minority of people, very well tolerated, and for a majority of people, very effective. And we've never had that before. So there is the doors of a mega market for obesity therapies is undoubtedly emerging, but I think, again, we're in the very early innings of this, and how it's going to unfold is, to our minds at least, not clear. These GLP-1 drugs, I would say, are not a panacea. They're not suitable for everybody. They're not tolerated by everybody, and you have to be careful about the rate at which you lose weight. So if you go on a GLP-1 for a year and you come off it, you'll put back about 70% of the weight that you lost when you were on it. So this whole weight management as a concept, we need to educate doctors about how to educate patients about weight management, because they've never had effective drugs before, and putting people on drugs, getting them to a target weight and then taking them off the drugs is just going to put them right back where they were in the first place. And all we've done is spend a load of money. So it's a very, very interesting kind of opportunity. Your point about preventative healthcare, though, is a far more important one, I think, and that comes back to the point about 1 in 4 kids in the UK potentially being obese, 38% of Americans potentially having pre-diabetes. These are healthcare time bombs waiting to explode, and we would be much better served as a society focusing on diffusing those than doing anything else. It's very interesting. I can't remember which Central American country it is, but there's a Central American country, let's say Costa Rica or somewhere like that, that spends on a GDP basis something near a tenth of what America does on healthcare, but it has broadly the same life expectancy. And the reason that it does is almost all of its healthcare dollars are spent on preventative healthcare. So they go traveling into the community, educating people about how to look after themselves, making sure when conditions start emerging, they get treatment as quickly as possible. We have a very reactive healthcare system here, where it's difficult enough to get in to see the doctor in the first place, and generally, because of that, people don't bother unless they're overtly symptomatic with something. And when it comes to serious diseases, it's often too late. Type 2 diabetes is a case in point. If you're overtly symptomatic with type 2 diabetes, you've probably lost half your pancreatic function by that point, which means that you're on the road toward type 1 diabetes. Conversely, if you have someone with early stage pre-diabetes, with some lifestyle and dietary interventions, it's completely reversible. So there is the answer to your question. We absolutely need to subvert the whole concept and move much more toward preventative healthcare. And in doing that, we need to recognize that we're not all equal. Some people have much higher risks, and they are the people that doctors should be focusing their time and resources on. And these are the things that we need to grapple with. Now, in America, they're doing this very, very successfully through a concept called value-based care, or fee for outcomes, where effectively physicians are paid a capitation payment to take on a patient, and then they get bonuses that kick in after, say, 3, 4, 5 years, that are based on actuarial predictions of that population. So let's say you get given 10,000 people, they're all baselined, and then we say, right, in 5 years' time, we're going to have this many heart attacks, this many strokes, this many people with diabetes, whatever you want to measure, cancer, and then you will get comped on how well they do. Now, what this means, if you incentivize doctors in this way, they, again, using very clever software, they look at the actuarial data, they work out who the 20% of those patients that are most likely to suffer a serious event are. They get them in straight away, and they start to educate them and help them to manage their conditions better. Now, there's lots of socioeconomic links with disease risk. And one of the things that's quite interesting, if you actually go and look, so Uber has set up a division called Uber Health, and it's directly related to this value-based care concept, because lots of physician groups realize that sometimes the reason people get ill is because they can't get to the doctor. So they're actually using Uber to transport the patients to get them in so they can have the appointment, get them their drugs, and then send them back again, because the incentives they get at the end of this process justify the investment at the beginning. VBC has been around for about 10, 15 years now. And if you look at the data sets that are emerging from that, from the long-term analysis, it saves money and keeps people well, which is great because it gives doctors the freedom to actually do the job that they train to do, which is to help people. The reality of being a GP in a country like the UK is you never know what's going to walk through the door. So by definition, in a large number of cases, it's going to be too late because those people, you should have seen those people 6, 12, 18, 24 months ago. If you create a system that incentivizes and enables you to do that, then you can deliver outcomes because you can actually change.
No, that's very, very, very true. We're sadly running out of time. I could keep going, but finally, I just wanted to ask you: ESG factors in companies are a big issue within the wider fund management community now. Is that something you spend a lot of time looking at in the healthcare sector? Does that? I mean, obviously, the whole sector's there to make people's lives better. Is it something that you sometimes come across where a company is somehow violating ESG criteria?
I think this is a fascinating topic. It's one of my bet noirs. So we take ESG very seriously at Bellevue. What's frustrating is that you need to benchmark your own analysis against some kind of objective third-party analysis. So there are all these, we don't need to name the providers. We all know who they are. When you look at the quality of those analyses, they are very, very simplistic. So, for example, one of the things that comes up quite a lot is that companies will get negative ratings because of a lack of diversity in their staff or a lack of support for poorer countries or something like that. Well, firstly, you can't donate drugs to any country that haven't been approved in a major market. Funny enough, it doesn't matter how poor a country is, they're not going to accept something that nobody else has approved. So there is a time period that you have to go through before you can do any kind of international, aid related support. Secondly, if you're an early stage R&D company, operating in whichever market you're operating in, you're basically only hiring PhDs. It's not the most diverse group of people you're ever going to find, and that needs to be accepted in analysing these sorts of things. So what you tend to find in healthcare is the skew between very large companies and very small companies on ESG ratings is kind of ridiculous sometimes, and the analyses are overly simplistic. There are clearly challenging areas. Genetic manipulation is used widely in research models. Animal testing is a legal necessity, and there are lots of things that certain investors kind of I guess have the ick factor, for want of a better word. I think the reality is exactly in the point that you made, Stuart, which is that these companies set out to do good, and they save people's lives. And as a starting point for a business, I think comparing that to aerospace and defense or something like that, or oil extraction, you kind of feel like you're starting from a good place. But the analyses are certainly complicated by the over simplicity of many of the external rating agencies with regard to understanding the industry.
Thank you very much indeed, Paul. Sadly, we're running out of time, so I'm afraid I'll have to conclude things there. You've been listening to the Armchair Trader podcast. We've been talking to Paul Major, who is the portfolio manager at the Bellevue Healthcare Trust. Thank you very much indeed, Paul, for your time today. You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.